What's going on, guys? Brian's here. Today is Wednesday, May 31st, 2023, and the market is closed. Figured I'd hop on and record a quick little midweek video here as there's an important lesson to take away as the SPY was in the Quant Trading App Buyzone. Now, within Discord, I ended up mentioning middle of the day here that the VIX was decreasing as the SPY was staying or holding the buy zone here, which is usually a sign that we're probably going to have some sort of a rally later in the day or towards the end of the week. Now, if you're having difficulty spotting this, first indication or first visual cue is the fact that the SPY hit the buy zone. We also get notifications right here. So we have, this is at 10:23 Eastern time here today. We can see that the SPY hit the buy zone, and that's just letting us know that alert is sent out automatically. It's letting us know right here that the SPY has hit this level that's referred to as this buy zone, and this is our QTA weekly support level. So it didn't hit the support level, it hit the zone itself. So right off the back, I'm going to start looking for potential reasons to be long. Now, just because we hit the buy zone might not necessarily mean a reason to just get long call options. It's also a way to manage positions that are previously open. So some of you guys know yesterday I shared the iron condor for today as well as for Thursday, and within the Discord we can see right here. So this was the iron condor that expired. So sorry, this was actually a 0DT iron condor that I opened. So I was coming in and that was a trade in which I opened, but let me just see if I can find the iron condor that was shared yesterday. So here we have, so let's scroll back up, and this is it here. So this was yesterday. I shared the idea of this iron condor, knowing that the SPX generally holds the buy zone and the sell zone after a couple of days the week has been open. So usually if it's going to break, it usually breaks by Wednesday or so. So in this case, the market was closed on Monday, so it's a short week. So it's a little bit of a strange week to kind of look at in this case here. But if we come back and we take a look, let's scroll down. This was the iron condor in which I actually ended up open. So I went with this one, which is for tomorrow's expiration, which would be Thursday, because I wanted to give it a little bit of an extra time. But as you guys can see, that this iron condor was short the 41.50 put. So for those of you that don't trade iron condors, that's essentially saying I'm thinking that the SPX is going to stay above this level, and I got that level straight from the QTA weekly support level. So as this notification went out here that the SPY hits the buy zone, I wanted to check in on my iron condor just to make sure that it was still safe. So in this case, the fact that we hit here, I went ahead and I gave it a little bit of time. Now I ran a 0DTE iron condor, but that's for not the purpose of this video. And I shorted some calls that are all the way up here, and I shorted the puts all the way down here, and I was pretty much thinking that the SPX was going to stay within this range. But again, that's a separate trade. I want to really just focus on the trade that was shared yesterday, because I'm using this information here to decide, is my iron condor at risk for tomorrow or for today? Because if we bounce, then we know the iron condor will end up being green. And let's actually just drag it over here, and you guys can see this is what it currently looks like. So I ended up closing the day up pretty well, about 40% received of the credit. So it ended up being pretty good. I ended up closing it out just towards the end of the day here, but it was shared yesterday. And my logic being, as we get here, I want to see clues that this level is going to break, or this entire zone is going to break down. Now, as I'm looking at this, I already feel some sense of security, because not only is it the buy zone, but we have max pain below it. We also have the intraday zone. Then we have N1, and then we also have the weekly support level. So this is 1, 2, 3. Sorry, 1, 2, 3, 4, 5 different things right within this zone here to allow me to have some sort of security in thinking this entire area should hold and price should revert back to the mean, which would be essentially just VWAP in this case if you're an intraday trader, or if you're looking for a little bit of a bigger target, then we have the 2-day anchored VWAP. So these two things, or these 5 things right here, is adding some sort of security, because I was a little bit nervous about the iron condor that I had running, and I was thinking, oh my gosh, is this going to be in trouble? Should I just close it out now? I think it was break even about here, so I wasn't really in trouble that much. I think it was only down maybe 15 cents or so per iron condor sold, so nothing that crazy, but this was an early warning that maybe I should take a look to see if something's wrong with the trade. Now, if we just zoom out here and we take a look, what do we also have? We have the SPX hits the weekly level, the weekly buy zone also. Let's pull up the IWM. And we also have the Qs are pretty close to the buy zone. We have the IWM, which was also hitting its weekly support level. It was within the buy zone. We also have the RUT, which was also hitting the buy zone. So all these are just the main ways. If we're looking at the quote unquote market, these are good things to take a look at. How's the SPY looking? How's the Q? So we have the S&P 500, we have the NASDAQ, and then we have the Russell 2000. So the RUT is just the index equivalent of the Russell 2000, and the IWM is the ETF equivalent. So you can use them interchangeably. So these are our three main things to monitor. And then on the right hand side here, we have the VIX. Now, some of you guys have, after watching some of the videos in which I've shared on the divergence with implied volatility and the SPY, have tried to look at every single little tick here with the VIX and try to figure it out. And I'm telling you guys, for as many years as I've been looking at the VIX, I used to trade the TVIX back in the days. It's no longer something that trades anymore, but the VIX is what I use now. I'm not staring at this all day long. The reason I'm going to take a look at this now is because I have my visual reference. The SPY hit the buy zone. I immediately, I'm thinking, should I do something here? If I already have positions open, then do I need to manage, maintain, or do something with them? It does not mean I want to open up a new position. It's just telling me, hey, take a look at, how's your risk profile look? Are there any trades that are in jeopardy? If you don't have anything open, then maybe this is an opportunity to open up a new trade, because what do we know? We usually get some sort of consolidation at these levels. So that's why I chose the 0DT iron Condor. That was a separate trade. For the swings, I wanted to come in and see if there's any type of maintenance that needs to take place. So then I'm going to take a look at some other clues, and I might use something like the Tradytics Algoflow within the Discord, and that would be this here. I'll just come in and just see, like, what's the bot request saying if I just run the Algoflow on the Qs, check the Algoflow on the SPY, just to get another perspective. What is this thing saying here? Is there any type of divergence? And it was a little bit alarming because it's still showing that there's a lot of bearish divergence within the S&P 500, where the current spot price is relative to where the Algoflow is showing. So if we take a look at something like the market, it's not showing there's any divergence. So this is just saying there's a little bit of a mixed signal here. So I just kind of canceled those out. And then I wanted to take a look to see what are the Qs saying throughout the day. So here's the SPY again, here's the market, and then we have the Qs. So the Qs don't really have anything that crazy. It doesn't really look, if the Qs had the Algoflow all the way down here, I would have been a little bit more scared. But the fact that this is green is letting us know that there's, in quote, there's more positive. The algo score is more positive, which is good. It's not that bearish. So just the visual cue color right there already helps. So this is green, and this is green. The only thing that's red is the SPY. So I was like, okay, all right, at least 1 out of the 4. So that's not too, quote unquote bearish. And the other end, the IWM had this. This is showing a little bit more of some bullish divergence here. This is showing nothing too significant, but this is a little bit bearish divergence. But at the end of the day, it's still green, so it's just showing there's nothing to be too alarming yet. And then these are kind of just mixed together here. So I'm just checking all of them just to see if there's anything that really stands out. The only thing that looked a little bit scary was this right here, because this is a pretty steep divergence. But again, the SPY is usually used for hedging for the most part for a lot of institutions, a lot of funds, and so forth. So if, in other words, if they're accumulating Apple and Tesla and Google and Amazon, then they might want to load up on SPY puts just as protection. So the SPY puts will generally always see a lot of negative flow for the SPY, just because of the hedging that the SPY tends to be used as. So that's why I like just checking all 4, and then I kind of move on. So that was something in which I took a look at, or something I'll just go check out after I take a look at, how's the IWM, how's the Qs. Let's just see what the Tradytics Algoflow is saying. I'm also then going to take a look at the VIX, and I'm going to say I'm going to give it a decent amount of time, give it an hour or two to decide if I spot anything. So in this case here, these are 15-minute candles. The SPY comes down, so it sells off. Let me actually just make these largest here. So I'll make the SPY larger, and we'll make the VIX larger. And we see that the SPY sells off, boom, it hits a low, and then it bounces, and then it puts in a new low. On the VIX, on the other hand, the VIX should work as the inverse. So the VIX goes up, and then if the SPY put in a new low, it means the VIX should put in a new high. So the VIX should look like this. In order for these two to, be in perfect synchronization with each other, the VIX should have gone higher, but the VIX did not go higher, even though the SPY went lower. So I've shown that example before. This is not nothing crazy significant, but what makes this instance a little bit significant, why I was clocking that, or at least it was worth me mentioning, is the fact that we are in the buy zone, guys. If we're in the buy zone, then it has a little bit more significance. We're not just floating around in the middle of nowhere. So it's the fact that the SPY is in the buy zone. I'm then taking a look to see what's going on with the VIX here. And if we come to the gold chat, that's when I would have came in a little bit here around that part. When I came in to check, I said IV has been decreasing since the morning while the SPY, this meant to be SPY, while the SPY is holding the buy zone. And then that's when I realized VARC, wasn't really sure what I was referring to. So I just came in here and I said the SPY made a new low earlier, but the VIX did not make a new high. So that's this right here. I just drew the arrow. So the SPY made a new low, but the VIX did not make a new high. The VIX should make a new high because that's a proxy for implied volatility. So it means implied volatility. If the market is continuing to sell off, generally we'll see implied volatility will keep going up. If implied volatility is not going up, then we can expect some sort of price to go back up. And in this case, I said it's nothing crazy, just pointing it out. If the VIX is not higher than today's high, sometime later today or tomorrow, then I'd expect the SPY to close higher than today's low by Friday. So today's low on the SPY is here. So I would expect the SPY to close higher than, we'll just call it 416 on Friday, unless we see the VIX higher than this level. If the VIX is not higher than this level, then I will not expect the SPY to be below here. So that means if tomorrow, for whatever reason, we see the SPY down here, and then we see the VIX here and it's struggling around here, well, congratulations, we have some sort of a downtrend forming right here. I will take that as a sign to look for additional reasons to be long, and I will look to target back up to anywhere that, whatever we see on the 0DT gamma profile, wherever absolute gex is, maybe it's 420 or so forth, almost a repeat of what happened in the weekly recap video that came out 2 days ago. So that's all I was looking at. That's what I'm mentioning. So for me, in this case, it meant leave my iron condors alone. There's no jeopardy at the time being. I could let them play themselves out. There's a little bit of security that knowing that the Qs are also right below there. And for the start of the day, I actually came into today as soon as the market opened saying I was expecting the SPX to, in a sense, be within this area. It was just because of the fact that there was absolute gex was up here, and then the way in which we gapped down, I was just expecting a little bit of a retracement and a little bit of some hovering around here, also knowing the fact that this was last week's point of control. So all these high volume nodes, I was just expecting the price to hover in this area for a little bit more. I didn't see it as, at least right before the market opened, I didn't think of it as it was a good rejection point. In hindsight, obviously, it made an attempt to get back above last week's point of control, and then it was just rejected, and we can see it came back up to this supply zone, this liquidity zone right here, because this whole area now is going to be some sort of supply unless price gets back over it. So if price is back over it, then maybe the SPY will head back up to 423, which I mentioned in the weekly recap video as the P1 strike. So there's a possibility of that, but it needs to clear this supply zone. So we can see this rejection right here and this rejection. So that's in my opinion what I was just looking for, just knowing that there's a ton of liquidity around 420 for obvious reasons, and thinking that we gapped down. So I was expecting, a little bit of a push up here, which we did get at the beginning. I did end up running a 41.95 long call butterfly at the open here, or it was an iron butterfly actually, and it was up about 60-70 cents or so, but I didn't take profit until once we broke back below VWAP. I was like, I told myself, oh, something is wrong here. That shouldn't have happened. So just kind of let this play out, went and let the market come down to the buy zone before I made my next decision. So hopefully this kind of explains a little bit of the thought process in which I had, and then I can just reference this video towards the end of the week when I do the weekly recap video, and then the same thing. So here's the IWM, multiple touches here. This is a key support level, and then we're seeing it at the in the buy zone. So what do we have? It should not be shocking that we end up getting this little bit of a push up here. The same thing with the IWM. It ends up getting a little bit of a push here. But what's a little bit alarming is we can see towards the end of the day, VIX started, showing a little bit of life, and we'll see where it ends up tomorrow. If the VIX is up over here tomorrow, then that's going to be a little bit more alarming, but we'll wait and see what happens. Lastly, I think I want to, let me see if there's anything else I want to show you guys. So the iron condor is covered. I already know that the long call butterflies down here ended up working out tremendously. I don't, unfortunately, the market has expired, so I didn't collect the data, and because I want this to be a quick video, I'm not going to pull it up and see exactly how they traded. So for a different example, let's just take a look at some long call options. So this is if the 417 call, which would have pretty much been the at the money strike price anywhere in this vicinity. So if you were to pull these up, we can see that this would have been going for anywhere around, we'll say 75 cents. And then the reward in this case was about $1.70, so about $100 return. So obviously, if this is the XPX, this contract would have been going for about $750 and ended up being worth about $1,700 or so. So a nice return here if you took it just as an intraday trade. Obviously, the long call butterfly would have looked beautiful. I think it probably would have been going for about maybe $4 or so, and then probably hit a high of $16 if I had to guess. So just another example, if not the 0 DTE, let's take a look at what the 1 DTE would have looked like. So for tomorrow would be the first. Let's see here. So in this case here, we have right around here is when the alert first went out of when we hit the buy zone. So about $1.66. And then later in the day, or towards the end of the day, just as we hit the 2-day anchored VWAP, we're talking about $2.50. So a little bit under $100 made here. Same thing, SPX. You guys can do the math. And if you were really cheap and wanted to go far out the money, the 620 for maybe Friday expiration. Now, if you wanted to avoid the 1 or the 0 DTE, let's see how that one looked. So right about here, we have about $1, $1.05, $1.10, and then a little bit of an intraday swing here for 50 cents, 45 cents or so. The drawdown would have been right about here. So about 91 cents. Let's just use the low here. So we're talking about a drawdown about 15 cents. So negative $15 to potentially make about 50. So that's a decent, that's a really good risk reward if you're avoiding the 0 DTEs, if they give you all sorts of heart palpitations and anxiety. But it's as simple as that. Again, I've repeated this or mentioned this in the weekly video. I have no idea what's going on, especially this week. I'm not paying attention to the macro news at all. Sometimes I at least like to take a look and check in, but I forgot even to look at the econ calendar this week until the market was already open yesterday. So I was a little bit late with that. There's some things on the calendar for tomorrow as well as Friday. I believe it's the jobs report and some stuff like that. But without knowing any of that, if you're trading in a vortex and you're unplugged completely from news channels, SPY and Buyzone, IWM in the Buyzone, VIX not going higher, but the SPY going lower. So there's divergence, and we have the Q just about in the buy zone. So we have, is there enough information here to potentially take a long trade? Then we go check the Tradytics Algoflow, and we see 1 out of the 4. The SPY is the only one that looks a little bit iffy, but for the most part, you know, they're not all looking horrible. And even if you're not using the Tradytics Algoflow, I'm just trying to add more confluences to in a sense, add to the trade. But if you want to target this region, because we know there's high liquidity, I'm leaving GEX intentionally out of this to keep it simple. But there you guys go. So keep it simple sometimes, and these are things in which I look for or look at. The reason why I came back in to check on my positions, once we hit here, I opened a new position, and then I realized I didn't need to do anything with the other positions, and then they both ended up being a winner here intraday. So I didn't buy any calls, but it doesn't mean you guys don't need to buy calls or run a long call butterfly. I won't be interested in that because I don't want to mess with the risk profile that I currently have open. Hopefully this helps, guys, and I'll catch you in the next one.